This is my requested video. Question is that what are the important reasons for the financial sectors of the economy? Once more, what are the important reasons for the introduction of financial sector reforms? This is the question of first sem PG or first sem MA Economics. So in our syllabus, the Calicut University of MA first sem, this is the paper Indian Economy Problems and Policies. In this, one of the important chapter or module is that financial sector reforms in module 4. That is the question that is in the case of module 4, one of the important topic is that financial sector reforms. To explain the question, the reasons for the introduction of financial sector reforms. So first, what about the financial sector reforms? Which are the components are included in financial sector reforms? Then how we can introduce that is the necessity of reforms in each sector. These are the important parts included in that is the reasons for the introduction of financial sector reforms. So this is the topic like the financial sector reforms included in module 4. Paper name is Indian Economy Problems and Policies of first sem PG or first sem MA Economics. The question is, what are the important reasons for the introduction of financial sector reforms? First, we can explain what is meant by financial sector reforms. Financial sector reforms related to so many reforms like, here there is a banking sector reforms, then securities market, then money market reforms, then capital market reforms, then last is that insurance market reforms. These are the main components are included in financial sector reforms. So to explain this question, that is these reforms are, that is in order to explain this question, these reforms are included here. That is financial sector reforms, that is equal to the summation of banking sector reforms, then government securities reforms, then money market reforms, capital market reforms, then insurance market reforms. These are the important reforms are included in financial sector reforms. So to explain this question, these components are included here. Firstly, we explain what are the important objectives of financial sector reforms. What are the important objectives of financial sector reforms? The first important objective of financial sector reform shows that to allocate the resources efficiently. And second is that increasing the return of investment. And third is that accelerate the growth of real sectors of the economy. These are the three important objectives of financial sector. That is the main important objectives of financial sector reforms, that is equal to, that is the first is that to allocate the resources efficiently, and second, increase the return of investment, and third is that accelerate the growth of real sectors of the economy. Firstly, what about the allocation of the resources efficiently? The main important objective of financial sector reform is that resource allocation become more efficient and more competitive. If the resources are allocated in a proper manner, this may accelerate our economic growth. For that purpose, the important objective of financial sector reform shows that to allocate the resources efficiently. Efficient, that is allocation of resources, or the resources are allocated in a proper manner or efficient manner. This may accelerate our economic growth. For that purpose, that is the first important objective introduced here. And second important objective is that increase the rate of, that is the return of investment. Increasing, that is the rate of return of investment, or increase the return, that is return of investment. to maximize the return or income from investment. That's if there is an increase in the investment, automatically here there is that's why you increase the investment. This is based on the rate of return or rate of income from investment. If increase in the return, automatically you are ready to invest here. The second important component, increase the rate of return of investment or increase the return of investment. If you are ready to invest when you have achieved or get maximum return or income, that is second important component to determine the objective of financial sector reforms. And third is that accelerate the growth of real sectors of the economy. Accelerate the growth of real sectors of the economy. Real sectors show that increase in the GDP. What is GDP? That is national income. Market value of all goods and services produced in a country during a given period of time, that is equal to real sectors. That is accelerate means to increase. Increasing the growth of GDP of the economy, of national income of the economy. If we increase our GDP, that's increasing the national income, automatically we move the path of economic growth or economic development. These are the three important components to determine the objective of financial sector. So are you clear here? What is that? That's to increase the efficient allocation of resources, and second is that increase the return of investment, and third is that accelerate the rate of growth of the economy. These are the three important objectives. Then financial sector reforms included the reforms like banking sector reforms, government security market reforms, money market reforms, capital market reforms, and the insurance sector reforms. Among these, first is that banking sector reforms. Banking sector reforms show that which are the important reforms are included in banking sector. So, to explain banking sector reforms, what are the reforms before 1990 and what are the reforms after 1990? Before and after 1990, which are the important part here? Before 90 and after 1990, these are the important reforms explained here. So, firstly, we explain which are the important reforms included before 1990. That is banking sector reforms, that is equal to what are the important reforms before 1990. There are important reforms at the same time, which are the main problems that is included, which are the main problems are existed before 1990. That's after 1990 there are so many reforms here. Which are the important problems existed before 1990, or what are the important reasons for the introduction of banking sector reforms? If you got a question like what are the important reasons for the introduction of banking sector reforms, or which are the important background for the introduction of 1991 banking sector reforms. So, to explain here what are the banking sector reforms before 1990. There are 6 points explained here. One is that no transparency and disclosure, and second is that no prudent norm, and third is that no competition, and the fourth is that preemption of resources, and fifth is that here there is the existence of administered interest rates and political interference, and last is that customer services. These are the major problems existed, or these are the major difficulties before 1990, or these are the background for the introduction of banking sector reforms before 1990. So, in the case of banking sector, which are the main problems or difficulties here? The first is that no transparency and disclosure. Yes, no transparency and disclosure about the working policy of the bank or accounting policies of the bank. Here there is no transparency and disclosure. Which are the main accounting policies of the government? This is not transparent. This is not revealed or not open. Next we move to the second important point here. No prudent norm. No prudent norm, or there is no particular norm or principle here connecting to there is bank management. bank management technique. That is, here there is an absence of proper norm or proper policy related to bank management technique. Like, there's a technique like capital adequacy ratio. Then, in the same way, asset liability management, then income management, etc. Here there is a inadequacy of proper norm or principle. That second important problem faced before 1991. No prudent norm or no actual principle related to the bank management. That is bank management technique like capital adequacy ratio, non-performing asset liability, then income. These are the second important problems related to that is before 1991 banking sector. And third is that no competition here. Before 1991, here there is a lack of competition. That is, here there is a restriction of entry of firms or entry of banks. That is, in the case of entry of banks in domestic and foreign level, both are restricted here. There is lack of competition. During or before 91, banks are not open, even the domestic and foreign level. In that case, they restrict the entry of new banks. If you increase the banks, this may automatically increase in the competition. It restricts, in the case of banking sector, it restricts. Here there is a competition. No firms are, no banks, that is in the case of no banks does not open its branches even in domestic and foreign level. Thus, here there is a lack of competition is the third important problem faced by banking sector. Banks restricted to open their branches in that is even the domestic and foreign level. That is another important problem here. And fourth is that preemption of resources. Here there is a two type of resources. One is that CRR and SLR. There are two type of resources. One is that CRR and SLR. CRR represent as cash reserve ratio. SLR represent as statutory liquidity ratio. These are the two important quantitative measures to control the banking system. CRR and SLR. CRR represent as, in the case of each and every bank, they keep their cash in reserve bank with the reserve bank. There are two important resources like CRR and SLR. CRR represent as each and every commercial bank keep, that is, they maintain cash with the reserve bank. Each and every commercial bank, they maintain cash with the reserve bank. This may reduce their business. So CRR, so it increase the CRR rate. This may automatically reduce the profitability of the bank. They keep that is a cash with the reserve bank. This may reducing their business or transactions, automatically adversely affect the profitability of the bank also. Another resource is that SLR, statutory liquidity ratio. Statutory liquidity ratio is the another quantitative measure taken by the government or reserve bank to control it. In the case of statutory liquidity ratio, shows that each and every bank keep a certain percentage of cash with them, cash or gold or security keep with them, not with the reserve bank, but each bank keep with them. So this reduce their transactions or business and adversely affect the profitability. These are the two important quantitative weapons are used by Reserve Bank to control the business of the bank. This also always this always raise the rate. That is in the CRR rate and also SLR rate, automatically raise its rate. This may adversely affect the profitability capacity of the bank. Then the preemption of the resources, that's another important difficulty faced by banking system. And fifth is that existence of administered interest rate and political interference. It shows that interest rate fixed by the government according to the policies and norms of the government. That which policies and norms are taken by the government does not consider the profitability, only according to the policies. Government purpose is that not making profit. In that case, the interest rate fixed by the government according to the government norms and policies adversely affect the profitability of the bank. At the same time, this is political support also based on political capacity or political interference. This also may be adversely affect the profitability of the banking system or the fixation of the interest rate. That is, interest rate fixed not based on demand and supply but according to the norms and conditions are fixed by the government adversely affect the profitability of the bank here. So that is another important difficulty faced before 1991. And lastly, the customer services. Thus, customer services of public sector banks at the lowest level. Government does not consider that is the preference of the customers or individuals. Customer services of the public sector, that's public sector bank, this is at the lowest level. That government does not consider the preference of the individual, does not consider the preferences or interest of the individual. So does not satisfy the preference of the individual. So customer services of the public sector banks, this also may be very lowest, does not satisfy customer services. These are the main problems faced by banking system before 1991. If you got a question like, what are the important reasons for the introduction of banking sector reforms, or which are the important background for the introduction of banking sector reforms? Thus, we conclude that these are the main important problems faced by banking sector, that's banking sector reforms before 1991. Now, the question is that, which are the important banking sector reforms during 1991 or after 1991? First question is that banking sector before 1991. After is that banking sector reforms after or since 1991. Which are the important reforms under banking sector after 1991? There are so many reforms here. That is, there are so many reforms are explained here. So, in that, which are the difficulties are faced before 1991? That is, two measures of these problems, it included after 1991. Just opposite. Which are the problems or difficulties are faced before 1991? That is, after 1991, it shows that the measures are just opposite here. In that case, first important measure after 1991 under banking sector shows that reduction of pre-emption resources. Reduction of pre-emption resources. That's before this we studied that here there is a two important resources. One is that CRR and that's the other is that SLR. If you increase the CRR and SLR, this may adversely affect banking business or banking transaction. At the same time, it will reduce the profitability of the bank. To overcome this, now because after 1991 under the reform, the CRR and SLR, it reduce the CRR and the SLR. Example is that in the before 1991 CRR rate as 4%. Then after 1991 it reduced to, that's in 1991 it reduced to 4.25. Then 2020 it further reduced to 4%. Thus reducing CRR, this shows that automatically increasing the business or transaction of the bank, increase the profitability of here. That is government reducing always, it shows that reducing, or here there is a deregulation of this may increase in the profitability of bank. That's one part. Other resource is the SLR, statutory liquidity ratio. Before 1991 it was 25%. Then it reduced, that's during 1991 as 23%. In 2020 it further reduced to 18.25%. From this we conclude that here there is a reduction of the CRR and SLR, or here there is a avoidance of regulatory system or deregulation system, automatically increase the business of the bank or transaction, it increasing the profitability here. That's the first important point. And second important measure taken by the government, that's taken by under banking system, is that here there is a deregulation of interest rate. That's in the problems you can identify here administered interest rate. Administered interest rate shows that interest rate fixed by the government according to government norms and conditions. Now we cannot allow the norms and conditions here. Interest rate become deregulated. No controlling here. That's on the case of advances and loans. This interest rate does not based on government norms and conditions. This become more deregulated or free system here. So this may increasing the business of the bank here. That is in the case of interest rate not fixed by the government or according to the norms and condition of the government. So this may increase the business or banking capacity here. The second important measure, that's during 1991 or banking sector reforms since 1991. And third is that prudential norm. So that is in the case of problem is that no prudential norm relate to the accounting policies of the government. Now here there is a prudential norm related to the capital adequacy ratio. It is a proper norms and condition here. Capital adequacy ratio, asset liability, income that's recognition, non-performing asset. They are, that is in the case of here there is a purpose. Here there's a proper norms and conditions. So this may increasing banking business. That's a third important measure. And fourth is that promoting competition. In order to promote competition, but the problem is that no competition. Now we can allow competition. Thus, that is bank, they may open their branches not only at the domestic level but also in the foreign level. New branches are open in foreign level and domestic level. This may increasing the banking business. Thus, it increasing the profitability of the banking system. That is the another important measure taken by the government to improve the banking reform here. Then, transparency and disclosure standard. Now, accounting policy of the government become more transparent. Thus, the bank possesses international standard here. Now, the bank prepare accounting policy which are highly competent and they possess international standard. Thus, it improve the accounting policies of the banking system, increasing its business, banking business. Now, the bank possesses that's the international standard accounting policy. Thus, it increase banking business or profitability of the bank. And next is that public sector banks allow to raise capital. Now, the public sector banks, they may allow to raise capital. Now, they may sell their shares. 49% share capital allowed to public. 49% of share capital sell to the public. This may important role taken by the banking system in order to improve the banking capability or banking business. Now they sell their share, 49% share capital to sell to their public, thus it increasing their business. That is another important measure or important reform since 1991 under banking sector. And next is the supervision. Here there is a proper supervision introduced under banking sector. For that purpose, a particular body appointed here that's known as Board for Financial Supervision. Board for Financial Supervision appointed by appointed by the government under banking sector in order to improve the supervision of the bank here. This also may be proper management, proper control. This may increase the banking business. And next is the customer services. Another important measure taken by the government under banking sector reform shows that here there is a customer services. One of the important drawback is that public sector, that's banks, customer services which are at the lowest level. Now, customer services, it improved by appointing, here there is a particular committee and council appointed by the government in order to improve the customer services of the public sector bank. That is, it consider the preference of the customers or the individual. So, based on a proper committee and council are appointed by the government to check the customer services. And last point is that technological development. Because of the part of banking sector reforms under technological development. Here there is the introduction of ATM facility, debit card, credit card, etc. Then here there is a introduction of net facility. All are introduced in the banking sector. This may increase their business and transaction. New developments introduced under bank, thus net banking here, debit card is there, credit card is there, ATM facility. All these facility improve the banking business. These are the, that question is that otherwise you got a question like which are the important measures taken by the government under banking sector after 1991. We conclude that these are the important problems faced under banking sector before 1991. And last, what are the important measures or which are the important reforms introduced in banking sector after 1990. So we close only one part. That is, financial sector reforms included so many components here. One is banking sector, other is capital market, and third is money market reforms and security market, and last the insurance market. So we completed only one component, that is equal to banking sector reforms.